The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the DAX like we usually do. As you can see, there's a nice Gartley pattern that is forming. And we'll see how that continues to go. We've been in this trading range here for about 10 days now, so something's going to happen probably very, very quickly. We'll take a look at the next one, which will be the FTSE, which is the UK. By the way, folks, the politics in London is no different than the politics here. They blindsided Theresa May, I guess, and made her look a little bit with a little bit of egg on her face. But I guess it goes from country to country. Nothing really changes. Now I'm going to answer. We have one question today from one of our listeners, and it is rather an interesting one. The question was, what was the luckiest trade I ever put on? I have to honestly say they're all lucky. And also the second trade, what was the largest trade that I ever put on? And I'll have to give you the story behind this. I was in London many years ago, and let me get the chart up so we can take a look at it, and I'll show you. And I was actually there as a guest of one of my friends who was an investment banker, and we were invited to go to one of these very, very private and exclusive English men's clubs. I mean, this is where they have butlers and everything. It's really it was really something to get there. And so the only way you can do business is in a private room. Everything else is really quiet. If you've ever been to the Yale Club in New York, it's about 10 times more prestigious than the Yale Club in New York. So it was really, really high level. But anyway, if you'll notice, this was March the 19th of 2008, and we were there at this meeting, and the gentleman that was our host was long a whole bunch of silver, and he asked my opinion on silver. So I pulled up the long-term silver chart, and I pointed to the fact that we were at an ABCD pattern, which also happened to be a 38% retracement from the high we made on silver, back in 1980 at, 54 bucks. And I said, this would be a place where I would certainly be out of silver. And if you'll notice that that we had made a higher high than the previous week by just a little bit. We were trading at around 2130, as I recall. And I showed him the pattern, and then I showed him, what the numbers were. And he was wanting to get out of it anyway. All I did was give him a little nudge. So he had his phone, and he picked up the phone, and he called his broker. He sold 2,000 contracts on the London Metals Exchange of silver, which is a larger size than we have here. This here, it's 5,000 ounces. Over there, I believe it's a little higher. But anyway, by the end of the day, silver had dropped about 25 cents from the high, and the next day it dropped $4 an ounce. That trade was worth $20 million. And of course, I had nothing to do with it, but it did go down, all the way down to finally bottomed around 2008, around $7. But that was the largest trade. I had nothing to do with the trade, but the pattern just happened to work. It just happened to work really big the first day, which was really quite spectacular. I believe the drop was on the 20th because we were there on the 19th, and then it went down a little bit lower. Okay, now I wanted to talk just a tiny bit about the stock market here, and then I want to spend the second part of the show going over some gold stuff, because we are at the proverbial moment of truth on this gold, I believe, folks. We have to pay close attention to it. But if we take a look here at the stock market since we've had the bottom in March of 2009, let's just pull this up here, and you'll see that we've only had two really significant corrections. Both of them, the first one was in July of 2011. That was right at a 382 retracement. And then we had another one, which was in November of 2013, which was a beautiful Gartley pattern right at a 61% retracement. But since that time, folks, oh, did I put this in the room or not? I don't think I did I? No, by golly, I didn't. Let's just get it in here so we can take a look at it. And you'll see we've just been going up, 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 up. Now, history says that something's going to change here. And my guess is it's not going to be too far from where we are now. And the reason for that is there's nobody out there looking for anything even remotely more than 5 or 10% at the most. And history says that when it comes very, very quickly, because when they shut the door, closes very, very fast. The $64 question is, when does the door close? And no one knows the answer to that. So what we try to do is to look at patterns. One of the things that you want to look for is to see how the news responds, or the market responds to the news. And if it stops responding to good news, that's telling you that it's getting a little bit tired. So we'll watch that as we try to go through, some of these things that we're looking at here each day. But I think that would be the. Someone's asked the question: Did I make anything off of that silver trade? Yes, I did get a nice gift. A very, very nice gift, and that was about it. And I was, thankful for it, so no big deal. That's Gator. We're talking about something that's near to my heart. We're looking at the gold. Remember, we talked about this gold yesterday. I'll start it because it's got a lot to say about gold. But we're right. Watch this level today at 1255, 1254 in gold. That's a 38% retracement. Since we bottomed down there the other day, at the 1238 level, all we've had have been $5 corrections. And if we get down to this level of 55, I believe that would be a $8 correction. And so watch that level really quickly. Now on the other side of this, if we go smashing down today, and gold gives back, a lot. In other words, if we get below 1248 level, we get below that. There's trouble in River City. So we have to be really careful of that. We know the seasonality in gold here is very, very strong after Christmas, but Christmas, my boys and girls, is 10 days away. And Santa can get pretty busy up on those roofs, and you don't want him to put any snow down your chimney, that's for sure. So you got to pay attention to it. But it might take several entries to get in, but I still think we've got a chance in this gold to make something really big. Now, David White has provided us with some of the great charts from The Art of Timing, the trade charts that we have at TFNN that goes through and searches for the Gartleys and butterflies. When we come back from the break, I want to share these with you because these are some of the major gold stocks that we look at, and it'll show you that they're all doing the same pattern, and I think that's important. And when we come back from the break, we certainly are going to talk about that. So if you have any questions, it's 877-927-6648. And then after we do the gold, we want to talk a little bit about some charts that Rich Anderson sent us from the satellite showing at the weather patterns in South America, particularly Argentina, which is one of the big growing areas. Also a very, very large Italian contingent living down there. If you can't go to Italy, go to Buenos Aires. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at the first of the charts from the timing the trade chart, timing the charts from TFNN. David White has put together this beautiful program for finding these things automatically for you, and if you subscribe to the service, he sends them out to you each day so you could look at them. And the ones we're looking at today are the beautiful patterns that we had yesterday in the gold market. You can see here that he does all the ratios, and they go out to the 100th decimal point, which is really more than you really need with for trading, because the difference between 0.43 and 0.382 for trading purposes is basically the same thing, just like the 1.27. So you see that pattern is completing. What we're seeing here is that we're seeing a whole bunch of patterns. The next one we're going to look at is one of my favorites, which is American South African. I actually knew someone that owned 1 million shares of that stock back in San Luis Obispo, California, 1965. There was a eye surgeon there that was a friend of the family and stuff, and well, not my family, but somebody else's family, but he actually had 1 million shares that he'd accumulated. He sold it for, I believe he sold it in 65. I think he sold it in 71, right before the gold started to, be traded. But he was in his 80s then. But that was the largest transaction that I had ever seen go through. That was at Walston and Company in San Luis Obispo in 1965. Boy, going back into history a little bit here. Okay, that's his next one. The next one we want to take a look at, of course, here is the this is another one of the miners, and it's another ETF. We'll get it up here so you can take a look at it. What we're seeing here, folks, is you're seeing that all of these patterns in these gold miners that we're looking at here are all showing the same patterns. The $64 question is, what does it mean? Well, to me, it means that something really big is in the works. Now, whether that's going to be the case or not, I'm really not sure, but what we want to do is to pay very, very close attention to it. That's the real key. Now, the last one that David has put together is not from Timing the Trades. It's just from his own chart that he uses, and I'll bring this up to let us take a look at it. This is one of our favorites here. This is Barrick Gold, which is the largest of the U.S. Gold miners, and you can notice here that we had this really strong move here yesterday when we got above 14. That could be very interesting, but you'll notice that we did complete the big ABCD pattern on this chart too. So that's telling us that we're looking at something possibly really, really important here in the gold. My game plan is if we close above this 1361 level, I think it's probably worth another position. That's what I would be looking at. But we still haven't done that yet, and it's still a little bit early. But if we do get above that, that's got a really good chance. The reason for the potential in this gold market is based on the fact is that we have this cycle that comes in December of every year. We're looking at that, right now as we take a look at this weekly chart in gold. You'll see that we're setting right at the 78% level yesterday at the 1238 level. 1238.30 was the low. We're now trading around 1258. So we've had a pretty good rally of about $22 a barrel. Let's try that again. $22 an ounce, and that's why if we get above this if we close above the 1261 level, I would think we're getting ready to at least run another $10 or $15. Now, we've had a pretty good correlation between the euro and the gold as far as topping. Today, we hit a 61% retracement on the euro, spot on at 118.63. We backed off about 60 pips from that already this morning, just the past hour. So that could be putting a little bit of a damper on the gold, but we'll have to wait and see. So we have that long-term weekly chart at 786. If we take a look here at the silver chart, right, taking a look at this on the weekly basis, we're now trading. This is where we were yesterday. We're now trading above $16, around 16.10, I believe, in the March silver. So that tells us that 78% level is held relatively well. And then the one that really sort of puts the glue into it, as far as something really big happening, is a precious metal that has gone into new low ground, but has also completed the big ABCD pattern. Going back to February of last year, where point 1 is marked, you'll notice that has completed just absolutely perfectly at 873 in the platinum. So, and we bounced a little bit. We bounced about $10, $12 from there. So that tells us this pattern's complete. Now, is it going to fail from here? I wish I knew the answer to that, but nobody knows the answer to that. So all you know that's what your risk is. So if you bought the gold yesterday, somewhere around that 1243 level, or if you got lucky and bought it below 1240, put your stop at 1243 and let her rip, because you're in a risk-free situation. You don't have to risk any more than that. And that's the main thing that you want to try to keep looking at it, and you'll be able to see what's going on. So we'll see how it turns out. Today will be an important day because of the test that we're having in the euro, and also the fact that whether we hold this 382 level in the gold level at that 1255. So far, the low in gold, February gold, is 1255. And that's it. Terry's asking a question about whether Norm is off by a day or two. I've asked Norm this several times, and he just really doesn't know, because that aspects that he was looking at was so big that he's never seen one that big before. I feel that there's a possibility he could be off, because there were some other markets that, had some pretty good moves on those days, but I really don't know. All I do know, Norm's going to be on the air on Monday. He's coming on because we have a full moon, of course, and then also we always talk to him around those full moons at least twice a month. But there's another aspect that comes in tomorrow that's really interesting, and that is Mercury is conjunct Venus. This is a thing known as combust. A guy named T.G. Butany, that's B-U-T-N-E-Y. He was an Indian astrologer, Vedic astrologer, and he talked about this combust, and we researched it, and is very good for short-term points for trading. That's true. They're also talking here, Terry, you're absolutely right. A lot of these commodities are very, very close to turning, and I want to cover that when we come back from the break, because Rich Anderson was unable to come on today because he was super busy, but we'll have him on next week. I want to talk to you about what could be changing here in the grain markets, because the wheat has rallied a good 10 cents off of the bottom that we were looking at, but we'll cover that when we get back, looking at some of the other markets that we want to cover, of course, which will be bonds, and then some of the other currencies. We need to cover the Australian dollar, because we're at a very critical level in the Australian dollar also. And I had a great question from one of our listeners in the UK about this. Let's try it again, Larry. The Australian dollar, because it's moved $1,500 in 3 days, which is a pretty substantial move. And the question is it going to continue from here? We're going to try to answer that when we come back from the break, looking at the Australian dollar. And then we want to get into one other question that one of our listeners had emailed me about the use of leverage. And we also need to talk about the satellite pictures that Rich Anderson has sent us about what's going on in South America. And we'll get a pretty good idea. I'm going to post a chart for the wheat in here because when we get back, we will talk just a little bit about the weather markets that may be forming.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the wheat market, which I've already posted. But we've got some really good information from our friend Rich Anderson. He and also Cy Monley from Sylvius Financial. They subscribe to these satellite services for weather that give you an idea of what's happening around the world. And what we're looking at here is something from Argentina. And you can see here that this really light-colored stuff is where the problem lies. The blue is where the favorable growing is, and the other ones are really bad. And as you can see, between 2016, which is on the right, and 2017, which is on the left, there's been a huge change down there, and that could be affecting some of these growing crops. And as you know, well, maybe you don't know, that Argentina is a very large supplier of soybeans. There's another map that I wanted to show you, and I believe this one is the same thing, showing a little bit different chart. I believe it's related to moisture, but we'll get this up here to take a look at it. We'll have Rich on next week to talk to us about some of these things. But you know, I'm a technician, folks. I just look at the chart patterns. I mean, we've had a rally in wheat and nothing really happening in corn, but this could be the beginning of it. And with these patterns completing like we're looking at in some of these things, it looks very, very interesting. Regarding the cattle market, you know, we had a really nice move in cattle the first day. The market took back 2 cents of it yesterday, but if we get below that 118 in Feb cattle, that is not going to be, 117 in Feb cattle, that's not going to be a good sign. And also feeder cattle must hold that 144 level on a closing basis, or it would be under a great deal of trouble also. Okay, final question for today comes from someone over in Asia, in Singapore, as a matter of fact, and we'll put the chart up for this. This is going to be a little bit of a question and answer. I want to see anybody that can tell me what this chart is. They will win a free book. I don't know when the book will come, but it'll be free. Anyway, just take a look at this chart, and I want to try to explain to you, because this will help explain pattern recognition and also leverage. And okay, time's up. Judge is ruling. It is a 4-minute chart of crude oil. That's what it is. And that's a good question, Mr. Bill, because if you take off what the price is, and if you take off what the time is, nobody can tell you what that chart is. That's impossible. So when someone asks you what the trend is, all you have to do is ask them, what time frame are you looking at? Because if you look at this time frame, you're looking at crude oil on a 4-minute chart, and the trend is decidedly down. We had a beautiful ABCD pattern right there. You can see it just as clear as you're looking into a mirror. Now, if someone asks you what the trend is on crude oil, you could say down, and they say, well, how could that be? Just a few months ago, it was $43 a barrel. Well, that's because you were looking at a different chart. So the trend is determined on the chart that you're looking at. And believe me, with smaller time frames, you have another thing. Now, there's 2 questions to this chart. And the one is, what is the smallest time frame that we look at when we're watching these? Well, I usually, at the very least, I'll go to a 4-minute chart. And the only reason I use a 4-minute chart is Jim Twentyman told me that the Earth rotates 4 degrees every minute. And so I think it's every minute. Or is it every hour? Oh, I don't remember. No, it's every minute. Yeah, well, yeah, it has to be, because it's rotating really quickly. Anyway, so that's why I look at that. So if there's a natural cycle there, maybe they pick it up. But actually, the difference between a 4-minute and a 5-minute chart or a 3-minute chart is not going to hold a lot of difference. You're still going to be able to see the patterns. Now, what's interesting about this is we always talk about leverage in this business, and one of the things that's really important to look at, this is crude oil. We're trading at $56 a barrel. $56 a barrel times 1,000 barrels, that's $56,000 is the value of that contract. Folks, the margin for day trading crude oil is $990. Now, if you divide 990 into 56,000, you get a pretty big idea of, 55 to 1 is huge leverage. So the only way you can handle that leverage is if you put your stop in, because if something would happen dramatically, like someone gets shot or a bomb gets dropped somewhere, and that thing would take off $2 or $3, at least you'd be able to get out with something, because you just don't know. So if you're going to trade leverage, you've got to protect yourself, because if you don't, Mother Nature is going to come in and bite you on the kabuki, and you don't want that to happen. That's not what you really want to happen. Okay, let's move on to the next question that we had. I hope that answers the question about the part about the leverage, and also, the smallest time frame that I changed. Another question was about Norm's date here, and I did want to mention what Norm said, and he did bring this out. I'll put this chart up so we can see it again. But he was looking for this big thing to occur on the 14th, where we had 142 different things occurring. But look what happened on the 12th, 13th, and 14th. The exact opposite occurred. So that's what he was really watching, is the fact that there's something really big in the air here over these time frames. So we'll see. This is I believe today is today is Thursday. That's correct. And then tomorrow is Friday, which will be followed closely by Saturday. Okay. All righty. Let's move on here and talk just a little bit, see how the market is reacting here. Probably having more of a rally. We're not doing much. This market's just about unchanged a little bit. The S&P's up a couple points. Dow's up about 25, so not really much is happening. So we'll keep an eye on some of these things. We'll watch it very, very closely. Now, there's two things that we want to watch closely, and that's this 1254 level in the gold. That's going to be really important, folks, because that's a 382 retracement. And at the same time that is happening, you're looking at the euro coming in at around the the 117.98 level. We're trading at 118.05 right now, and that happens to be the 382 of the bottom that we made back on the 12th. So this is why, if you're looking at shorter time frames, you can look at them and say, okay, this could be something that would give us a very good low entry, and you want to watch to see if it's going to hit that price. And in fact, we're almost there right now as we're looking in gold. My little beeper's getting ready to go off. In fact, it just did at 1257.70. So we'll 57.80. Excuse 1254.70. It just went off. So let's keep an eye on it to see what's going to happen with it. And then the euro is coming in at the 117.97 level. Okay. Remember, fact is we're about 50 cents. Oh, we went $1 lower now in the gold. That could be an interesting sign here. We're really at the moment of truth. If this gold gives up the ghost, folks, and we get down into this, means that this might be a false bottom, and we'll see. But we've got a nice lead in this right now. You got to stop at break even, so that's the best thing you can do. The second best thing you can do is to turn off the monitor and don't look at the darn thing, because frankly, that is not what you want to do. That's not a fun thing to do if you're watching your charts, because the monitor is not your friend, believe it or not. It's a mirror of all the psychological imperfections that you can possibly get, and that's what you want to keep in mind. So we're going to come back here. Got a lot more time to cover some things, and we'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
And someone asked me if I bought the gold at 1254, where would I put a stop? Folks, I would not risk more than $2 on this. The low so far has been 1253. What has been the low? The low has been 1253.70. So I would put a stop at, say, 1252.70. You're only risking that's $2.70 on a contract that's worth $125,400. So that's all you have to do. And I wouldn't even buy it unless you already own some, down there in that 1243 to 1240 level. Then it's certainly a way to do it. But if you're not in it and you want in, with a really cheap price, that's about it. You got to have about a $2 stop on it. From where we are right now, we're at 1254.70, and I think at 1250. $2.70 from there. You'd say sayonara, we look at something else and get back to looking at that 500-day moving average, crossing the 200-day moving average with the oscillating oscillator turning up. So we'll wait and see how it finishes up today. One of the questions earlier this morning was about commodities turning in price. We do have that possibility. We've got, near very close to lows already in wheat and corn. Beans have held up relatively well, but they've still sold off quite a bit. Crude oil selling off a bit. Gold and silver are certainly in areas where they are very, very oversold, and platinum is, in the old outhouse. So there's a lot of things that are going. Sugar has been breaking down really badly, as has some of the other soft commodities. So there's a possibility that we could be looking at something like that. And we're coming in to the end of the year, which as the new year comes up, that's when a lot of these things change trend, especially when you're looking at the foreign exchange markets. Foreign exchanges, for some reason, that month of early January to into February, there's a lot of things that occur. And I don't know if it's people are just, booking orders for the new year or not, but, we'll just have to, get to that point and wait and see. But right now, we don't see anything really dramatic in this, because the euro is still, only it's 100 and some pips off the bottom. And if we go below that 117 level in the euro, you're looking at something a whole lot worse. And that means that the U.S. dollar would turn and get way above the 95 level, because we stopped right at the 61% retracement on that U.S. dollar. That was on Monday, and we were looking for that to see if it was going to do that. We'll get this up here so you can take a look, and you'll see what happened. The market immediately turned down, and that was telling us that we should be coming into some pretty strong support around 93. 92.75 in that U.S. dollar, because if we get below 92.40, that head and shoulders pattern that you're looking at right now is toast. It's no good, and that means that the dollar is going to get a whole lot weaker, and the euro is going to get a whole lot stronger. And we could certainly see that without any trouble at all. Now, I wanted to go to the Australian dollar and talk a little bit about that because we've had a couple of questions. This is the Australian dollar that we were talking about on Monday. We hit the exact bottom here. There's a lucky trade, but we got down to 75.08. That's where we were coming in on Monday morning. We're all the way up to 76.60 now, so it's rallied 160 pips, which is $1,600. Now the $65 question or $64,000 question is, what do we do now? Let's just put the Canadian up. Wow, Larry, get these countries right. All right, this is the Australian dollar down under the old. Take a look here. We'll see here that you're looking at this is hold on one second here. This is known as we're up 160 pips from that level. And what do you do now? You're up 4 days really strongly, Monday, Tuesday, Wednesday, Thursday. And so what do you do now? This was the $64 question posed to us by someone across the pond. And I'll put his chart up here to let you know what his quandary is, and I'll see if I answered it the correct way. Here's what he was looking at. He had bought the Australian dollar just exactly like he should have down there at that 78% level, and it's had a tremendous rally here up to the 76.60 level. And look what's happened. It's banging against that 20-man line going back to last May. Look how many times it hits that line. It's hit it 1, 2, now is the third time that it's hit it. So his $64 question to me was, what do I do now? The other thing that you have to keep in mind, that look at the BC swing on that chart. You'll notice that that's almost exactly, well, it is exactly what we've done so far. The last time we had a rally from B to C, it was 160 pips. What did we do this time from point D? 160 pips. So where are we standing here? At the 20-man line. So what do you think I said to him? Of course, I didn't want to say what I said to him because he asked my opinion, so I gave it to him. If it were my position, what I would do is I would sell the Australian dollar here at the 176, at 76.60, and then I would buy it back at 76.80. In other words, if it goes popping through that line by 20 pips, I want to get back long again. And what I would be looking for is, if this market is really bullish, like we're potentially looking at in gold, is watch for a 382 retracement, and that would give us a really good entry spot, and that would be down about 50 pips, right around the 76.10 level, to see if that's going to be the case. So that's how I would handle that. I would be welcome to take any criticism or suggestions, but that's the way I would look at it. One of W.D. Gann's favorite rules was, never lose your position. Well, you got to lose your position sometime. You're going to have to take delivery. So it just depends on, how you're going to handle it. And that's the main thing. I would not be afraid of buying more at 77 in that Canadian dollar, because then you're really heading a lot higher, and that would give it a pretty good chance, to move to that point. Anyway, those are the things that we're kind of keeping an eye on this morning. So pay close attention to this gold, folks. It's got a chance. It's not, it's not the what we call it, the mother of all trades, which I don't know if there is such a thing, but it's certainly low risk down there at that 1254 level in the gold market. So watch it very, very closely. Someone's asking a question about these mergers and acquisitions. That's way beyond my pay grade, folks. I'm a technician. I just look at these charts, and if the charts are going up, I assume there's more buyers. If charts are going down, I assume there's more sellers. By the way, regarding this, there's been, over the past 4 or 5 trading days, we've had huge increases. I mean, like we've not seen before in a long time in the S&P contract. We've gone, we're averaging about 1.5% and 2% increase in open interest each day. And so that's a pretty big number. So keep an eye on that one. That's telling us that there's a lot of players coming in, and when a lot of players come in, that means the volatility is going to increase, and that's something that you want to pay particular attention to, also. So just kind of keep an eye on it. It would be very interesting, to see what happens with that, but we'll have to give it a little bit more time. Well, we still got the Nasdaq's up about 14, the S&P's up about a point. Dow's up about 20. We'll take a little break here. We'll wind up the show 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to thank everybody that helped us last week with the gospel mission stuff. We've fed 100 people for Christmas, so thank you very much, and may God bless, and try to do something nice for someone that has a whole lot less than you do over the holidays, because, boy, there's a lot of people out there that certainly have a lot less than what most of us have here at TFNN. So let's keep a really close eye on that. Tomorrow we're going to take a look at some long-term charts on these currencies, because as we come into the beginning of the year, we're going to start to see some really big things happen, and we'd like to maybe prepare ourselves, you know, for the thing like for instance, this Australian dollar has a potential to have a huge move because of the fact on that long-term daily and weekly, you know, we hit the 78% level and came off really strong, but we're doing the same thing in these metals too, you know, also, even though the gold is now trading at 40 cents under where I bought it, but that's the way it goes. If you lose a couple bucks on this, folks, it's gonna not be the end of the world. But if we get gold below that 1248 today, in the February gold. That's going to be a little, especially if it closes down there, that's going to be, a bit troubling. But if we can hold that level, then we've got a chance. This is the first time we've had a good ABCD pattern here. We've actually came down $10 from the high. Usually the most it's going to give you is 11. That's why the stop is just a little bit below that 1252 level. So you're risking about $270 on a contract that's worth 125,000. So that's really good, risk reward. So just watch that as you're planning your trades for today. Remember, if you fail to plan, you plan to fail. So keep that in mind also. This would be, I would think, the last day. The 14th would be the last day of Norm's aspects to see if they're going to hit or not. We still love him no matter whether it works or not, but who knows. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!